Welcome to Illuminati Silver. We tell you the truth about silver. Today is Monday, or the early hours of Monday, the 13th of May 2024. And last week we saw precious metal prices rise quite significantly. And this coming week, they could rise even further and at a higher rate. Equally, the market could be disappointed and prices fall back, though we are remaining optimistic. Why? Well, let's take a look. Now first, just a quick reminder, we've set up a second channel entitled Finances Do Matter, covering a whole array of financial topics. We've placed a link in the description box and comment section below for those who've not as yet joined that channel. Now, gold rose $58 last week, rising from $2,303 to $2,361, having been as high as $2,378 and as low as $2,292, a rise of 3.5%. In our last update, we predicted that gold would trade between $22.50 and $23.75, which it did, and closed towards the top end of that range. It did very briefly on Friday exceed that top by $18, but fell back again within that range. Gold spread between high and low was $86. In sterling terms, gold finished the week at £1,887, that's up £50, and it closed up €54 at €2,195. Silver performed better in percentage terms. It rose 6%. It rose $1.62, moving from $26.58 to $28.20, having hit a high of $28.79 and a low of $26.46. Last weekend, we forecast silver would move between $25.50 and $28.50, and again it closed towards the top end of that range, though like gold surpassed the top by 29 cents for a few hours. The difference between its high and low was $2.33, just 8 cents less than the previous week's difference. In sterling terms, silver was up £1.36 at £22.55, and in euros it closed up €1.51 at 26.22 euros. As a result, the gold to silver ratio fell from 86.6 to 1 to 83.7 to 1, almost 3 points. Bitcoin is down $2,300 on the week at $60,961. May not happen this week or the next couple of weeks, but we are anticipating further falls in most cryptocurrencies. Equities were higher across the board. Dow Jones closed up 837 points at 39,512. The S&P up 95 points at 5,222. The Nasdaq up 184 points at 16,340. And the British FTSE 100 index was up 220 points, which is a good performance for the FTSE, at 8,433. Oils, though, slightly disappointing, were broadly unchanged, save a few cents. Brent crude down 17 cents at $82.79, and WTI crude up 15 cents at $78.26. The dollar index stands at 105.30, that's up 0.27 points on the week. Now, last week we said, quote, in terms of US economic data, we have consumer credit figures for March on Tuesday, with most of the week with various Fed officials and presidents commenting on their view as to how the economy is faring. Well, the consumer credit figures were down in March from $15 billion to $6.3 billion, against expectations of 14.8. What moved markets, however, was not that figure, but it was the initial jobs claims, which came out at 231,000 compared with 209,000 the previous week. This, coupled with disappointing non-farm payrolls the week before, gave heart to traders that the economy is slowing and that interest rates may indeed come down soon, though many are now predicting September as opposed to the previous thoughts of June. And we've said for a little while now that June was a little optimistic? Well, we'll get a clearer insight this coming week, because on Tuesday we have the Producer Price Index data, and on Wednesday CPI, or inflation, for April. Now, markets are expecting the CPI to come in at 0.4%, thereby reducing the annual CPI from 3.5 to 3.4. And the core CPI is predicted to come in at 0.3, reducing the annual rate from 3.8 to 3.6. If this or better is achieved, we can see precious metal prices and equities rise. If the retail sales data also published the same day is favourable, prices could in fact soar. Equally though, the opposite may hold true. If the data is disappointing, then we will see a fall. Either way, next week is going to be a most interesting one indeed. So, what can we expect for gold and silver prices this coming week and moving forward? Well, the spread may be significant unless the data is benign, and the market has already taken that into account potentially, though we forecast quite a sizable move ourselves and difference between highs and lows. What is heartening is that although US Treasury yields rose last week, so did gold and silver, and normally there is an inverse relationship. Technical analysts, and especially those following Fibonacci retracements, are envisaging prices potentially hitting $2,431, or falling to as low as $2,277. That's gold, by the way. Silver, having posted its strongest gains since April, is being jacked up, verbally at least, to prices as high, potentially, as $30. Whether one is bullish or bearish, the general consensus is high volatility this coming week. So with this in mind, we envisage gold is going to trade between $2,300 and $2,425, with $2,275 and $2,450 as outliers. We predict silver will trade normally between $27 and $29, with $26.50 to $30.25 as outliers. We're not ruling that out if the inflation data is favourable. Quite a large spread on the outlier range for silver, because we are anticipating some euphoria on the upside or disillusionment on the downside, though the trend for the moment is most certainly positive. What do you think? Please do share your thoughts. We'd appreciate it if you would give this video a thumbs up, subscribe, press the bell sign, pop on over to Finances Do Matter and register there if you haven't done so. And here's to a very successful and prosperous week ahead. Thank you for listening.